Yo, what's up you guys? Welcome back to another video. And in today's video, we are going to be speaking about the NFP data, why the dollar reacted negatively to it, what we can expect from the dollar index this week. We're going to cover everything. Now, if you're new here, please go over to the educational section so that you can understand what the PMI, CPI and all of that stuff is. I've made a couple of videos explaining exactly what those things are in there as well. And without any further ado, ladies and gentlemen, let's jump straight into the data. Now, before I get started, I have received a lot of emails from people asking me about the funded accounts. So the thing is, as you guys can see, I've been very busy passing accounts. Basically, I will be able to get back to your emails this week. As you can see, these last two accounts are mine with another prop firm that I'm busy working with. So these are my accounts. I just have 100k account, so I've got leverage now, so I will be able to reply to some of the emails that I've been getting there as well. Without any further ado, let's jump straight into the data. Firstly, we had the NFP data that came through positive based off not just the expectation, okay? But if you look at the NFP data, okay, we can see that more jobs were added. 23,000 jobs were added based off the Dow Jones' expectation. It was slightly less than what we received in November, because this job report was for, if you guessed it, December. It's not, just because just because the data comes out in January doesn't mean it is for January. It's the previous month's data. It cannot be for January because there's no data for January yet. One thing that really surprised me, which I think surprised a lot of people as well, was the unemployment rate, which came down. It actually dropped from 3.6% to 3.5%. As you can see, the Dow Jones' expectations was at 3.7%. So I was not the only person who thought that the US unemployment rate should have gone up based off the little bit of progress that they've made. But again, anybody can say it should be higher or it should be lower, and that is why it's always good to wait for the information to come out. We also had the services PMI come out. We've had the manufacturing PMI come out, and both of these surveys being done on corporate. So we're not going to talk too much about that. The ADP is an automated data processing center, which also provides data with most recent people that was added to the payroll. A lot of people think if the ADP comes through higher, that the NFP should come through higher as well. Now, you can sit there and say, yeah, but it worked. Yeah, it just worked one time. If it worked every time, so most of us would be very profitable trading the NFP, and not through a 50 pip buy stop or sell stop and then say you knew it was going to go that way. So this week, firstly, we're going to talk about Powell. That's going to come through, obviously speaking about the information that we received, and he's probably going to say, but we know that labor market is strong, because that's what he say all the time. We do have the most important key indicator, which is the CPI, which is something I personally will be looking forward to. It's the CPI data, the consumer spending index. This index is used to measure inflation. Now, this would be a very good, I'm dying to see this, okay? If this CPI report comes through lower, then by all means we could, but that's not going to stop the Feds from continuing with hiking interest rates. They might just not hike it as aggressively, but it doesn't mean that they will not hike it. Now we're going to come to why the dollar is where it is now. A lot of people said the dollar was melting, which was weird because it's closed basically where it opened. It actually closed higher where it opened on Monday, so it hasn't gone anywhere if you basically look at it. So I'm going to go on the daily and go back onto the 1 hour. So if you basically go on the daily time frame, if you remember, this is basically somewhere that's Tuesday there. So if you look slightly left there, you can see that the index is yet to move. Now, there was good opportunity. I was looking for opportunity with Euro USD as well as GBP USD, if I remember correctly. Yeah, this was on Euro USD and was looking for some opportunity somewhere around here as well. But now that we are here, now that we know we are where we are, the most important thing that we are going to be focused on this week is going to be, firstly, what Powell has to say based off the jobs report that was released. And we're also going to see what the CPI is going to say. And I bet you he's probably going to say that we still have to monitor inflation to see how it goes, and then from there make a very informative decision. Now, we're going to take everything very, we're going to be very strategic in the way we're going to approach the market this week. But before we jump there, firstly, what we had over here is we had, firstly we had, let me close that. Firstly, we had the NFP, as you can see there. Okay, let me just close this very quickly. Firstly, we had the NFP there. Now, a lot of people was like, okay, but the NFP came through higher. That means that, it should have been good for the dollar index. Yes, it should have been good for the dollar. So why did the dollar index tumble to the downside? I'll tell you why. Firstly, the good labor market, a good job report, means that the market is not slowing down as anticipated. Well, it means that if you think of it in this way, right, generally when more people, if inflation goes lower, it means that more jobs are being created. Now think of it in this way: if everything is going to according to the Fed's plan, because the Fed's plan is basically to bring down inflation. Now, when you bring down inflation, people is supposed to lose their jobs, right? Because why? You hike interest rates, people are supposed to be without funds. But here you get a high inflation country that adds jobs month over month, and investors are going, how is this possible? So due to skepticism, people feel that because there is a cooling in the labor market, because that everything is still going fine, the Feds are less likely to take as an aggressive hike. The next thing we saw over here was a slight pullback. Next thing you know, the PMI says, you know what, we're not done with you yet. So firstly, what we saw over here, let me just do this over here. Now, if you remember a couple of months ago, you know what, we had the same conversation. Because why? Normally a positive NFP means a growth through the index, but in a case like this, Feds are, investors are normally skeptical to think, whether or not the market is moving, not whether or not, but if you are in high inflation, why are we adding new jobs? But also, investors also now feel that the Feds are potentially moving in the right direction, and they are starting to cool down inflation. But we will never know unless we get the CPI data. CNBC says stock staged first biggest rally since, not the biggest rally of 2023. Again, which leads one to think, right? If you think of it in this way, right? That's the breakdown that I did. It says here, stock staged first big rally of 2023 as hope grows that inflation will ease. Dow closes up 700 points. Now, I mean, if you look at the Nasdaq had basically gone back to where it was on Tuesday. Now, the Dow Jones on the other side, I understand over here that the Dow Jones actually broken out of the consolidation. The Dow Jones was up, let's say 0.69% higher than what it was for the entire week. And I've got an article that says that, the Dow Jones closed up to 700 points. But in any case, let's continue. It says US stocks advanced Friday after December jobs report and economy activity survey showed that, which is the PMI, the services PMI, showed signs that inflation may be cooling, signaling that the Fed's interest rate hikes having their intended effect. Okay, I'm not going to go through that. That says, it was the best day and the best for the Nasdaq since December 29th. Well, that hasn't gone anywhere, but okay. That also helps stocks in a positive territory. Okay. It also says the December non-farm payroll report shows that the U.S. economy and wages grew slower than anticipated, increasing at 0.3%, and on the month where economists expected a 0.4%. It says here all investors care about is that the data suggests inflation is moving towards the Fed's target. Basically, as the inflation gets to where the Feds want it to be, they will stop hiking interest rates. Now, that's what Michael said, and he's a chief investment strategist. Now, they say that that's all investors care about, and average hourly earnings suggest inflation continues to slow. Now, they are excited about that. They say that basically the wage grew slower than anticipated, increasing from a 0.3% on a month where economists expected a 0.4%. Now, all of this weighs down to one report that's going to be released this week, which is the CPI that's going to come through on Thursday. This indicator will be very key to what we can expect the Feds to do when they announce their first interest rate hike on the 1st of February. Now, we're going to, again, work our ideas just like we did it last week. We're going to work our ideas back to where it was. Now, the way, if I just look at the price action overall, I can already see that there is a gap that needs filling between where the dollar index is at the moment to the next resistance level for gold and any other currency pair. Now, what do I mean by that? So firstly, we can see here that that the dollar index is basically back into this sideways market that it had moved. Now, there's no question that the dollar index is going to go lower and then hit that level, and then obviously from there we could make another update. Now, because the dollar index is negatively correlated with precious metals and stocks, also with any currency pair that trades on the spot, that trades against the dollar index, we know that because the dollar index is expected to move lower, we basically expect everything else on this list to continue higher. And we're going to start basically with the Nasdaq 100. Now, I'm just going to close this. Now, the Nasdaq going into next week could potentially just see a slight move higher. We could potentially see the Nasdaq go and hit that level there. But in order for that to happen, we need a clear daily close on Monday, and then from there we could potentially see the market going higher. We could also, that's what's important, that you wait for the daily close. We could also just see the dollar index continuing higher, or we could see the dollar index the Nasdaq just do a liquidity move to the downside and then continue this range. But yes, the Nasdaq's going up slightly, but we need to wait for the CPI data to come through as well. Next up, we've got Euro USD. Yeah, as well. Let me just close this very quickly. So if you look at the Euro USD, also got room to the upside. If you look at this strong level of resistance over here, we know that the market is now trading once again above this level over here. Tracked as a level of resistance, support broken above support. We can expect a slight pullback and then that continuation going into Monday to go and test that previous level of resistance, as we expect the dollar index to weaken slightly going into next week, because we've got the CPI data that's going to come through. Where are we now? There on Thursday, right? So let me close this and close that as well. So definitely expect a higher move from these pairs going into next week. Let me close that. Next up, we've got the Dow Jones here as well. Dow Jones closed higher. I expect a slight pullback and then a continuation to that level. Again, depending on, this is just short-term price action that you can make use of. Yeah, gold here as well. Gold has got some room to clear here as well, so potentially that level over there. Gold also closed above this strong level of resistance. Going into next week, I do anticipate a slight pullback and then a continuation to the upside, basically just to go and fill in that price as we anticipate the dollar index to continue lower. GBP, USD, we have to be a little bit careful with this one over here, although I do anticipate a slightly price higher, but this market has yet to break above this level. Now, if you are a day trader, I would suggest you monitor price on the 1 hour time frame, for instance. And what you do want to look out for is you just want to, or even the 2 hour. I just don't like too much noise. But what you do want to wait for is basically just monitor all of this price. You can see here is some good, here's some good price. There's a good there's a good price that we can expect the market to fill in there as well. And this is all on the daily time frame, so I kind of do expect something to take place around here. Now this is not a signal, this is basically me just telling you that if you are a price action trader, you can potentially make your way into this market after a clear break on the 4-hour, 2-hour. But based on the daily, wow, that is not where I anticipated. Sorry. That is where I needed it to be. Sorry. That's still not bad, right? Because let's assume you get in on this market there and you get a nice tight stop loss there. 1 2 3 1 2 3 go. So that is basically what I'm anticipating. And then before I say goodbye, it's now very important to please understand that we need to get a clear daily close above this. Then by all means you could look for buys just for the market to go and also clear that support level on the index. Now remember, high CPI number means high interest rate. Lower CPI number means lower interest rate. So if you do get a high CPI reading, we can definitely expect the market to react positively to the dollar. If you get a lower CPI reading, then the dollar index will continue this move to the downside. I will give you guys another update as soon as I have the data available. For now, just enjoy the ride. That's all from my side. Thank you for your time, and as always, have a good weekend and cheers for the ears.